No trading today, brother. We're back testing. What's good? What's good? Starting at 9:30 right here. We're starting at 9:30. Yeah, yeah, yeah. Let me fix everything or not. Let's see. Yo, yo, yo. We're starting at 9:30. What's up? Just fixing everything. What's good? What's good? What is the unicorn strat? We'll look into it for sure. Super simple. Give me a sec, brother. Let me set everything up. We're gonna go over 3 examples. I'm gonna be super brief, but super direct. Just trying to fix everything here. Give me a second. We're gonna start at 9:30. We're just gonna let some people join up. There you go. Fix the chat. This looks nasty. Yeah, yeah, yeah. What's up? What's up? How you doing, Navi? What's good, brother? We're starting at 9:30. 10 more minutes. We're gonna let some people join. Just fixing everything. Give me a second. Let's let some more people join up. Happy Thanksgiving to anyone that's from the U.S. I'm not from the U.S., but happy Thanksgiving. Mm, Monday at 7:30. New York. It's 2 in the morning. All right, yeah, perfect. Perfect. There you go. Damn, actually nobody's joining. 2 loyal viewers. 7 more minutes. We're starting in 7 minutes. Oh. At everyone. You're right. You cooked. Get in here. You cook with that one. Thank you. All right. Now we wait. Now we wait. We wait. Um, let's play some chess in the meantime. I don't want to use my phone. Let some people join. Oh, why is this so buggy? Oh, he got me. Why the fuck is it so buggy? Nah, nah, we cooked. We're cooked. I give up. No more chess. Just woke up. Alright. We got 7 people in here. We're starting in 4 minutes. I'm gonna be super brief, but very, very in depth, very thorough, but super brief. We're gonna backtest this Monday, Tuesday, and Wednesday, so y'all know what I was watching. I'm gonna go in depth on the unicorn, um, contract sizing, daily bias, my top-down analysis, everything. We're gonna be brief. We're gonna be quick with it, but very, very in depth. So I hope to provide value to y'all. I would get pen and paper maybe. We're starting in 3 minutes. See if some more people join. Starting in 3 minutes. Yeah, yeah, yeah. Let's see. Need to go to 925 New York, which is right there. We're starting in a minute and a half. What's up? What's up, my boy Rodrigo? How you doing, brother? Bom dia. Bom dia, amigo. Starting in a minute. Yo, 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 ho, what's up? It's Curse. What's up, brother? We're starting in a bit here. In a minute. Gonna let some more people join to see if they join. Maybe, perhaps. Got 7 people in here, I think. Not too sure. Like I said, I'm gonna be very in depth but very brief. I'm gonna cover my whole strat, my top down analysis, and we're gonna review this Monday, Tuesday, and Wednesday what I was watching, my thought process, and everything. Let's see if some more people join. Happy Thanksgiving to anyone that's from the US. I'm not from the US. Because of you, we get no fucking trading today, but it's all good. We could backtest. It's all good. All right, I think we're gonna start to backtest. So before I say anything, I just want to say that this is what works for me. Not because it works for me, it's gonna work for you. But I hope anything I say could provide any level of value. If you've traded ICT before, or if you know ICT concepts, um, everything fucking works. Fair value gap tabs, inverses, order blocks, everything works. What you have to do is pick one and just stick to it. Don't do different entries, don't do different strategies. Just pick one and stick to it and die on that hill. Backtest it, forward test it. Everything absolutely works. This is what I found works for me. I'm more of a mechanical trader. It's easier for me to be more mechanical. So the unicorn, it's super simple. If you don't see the unicorn, you don't trade. If you see the unicorn, you trade. So right now, well, you can't see the time, but it's 9:25 New York right here in the backtest. Something we need to keep. What's the best backtesting site? Let me go ahead. All right, yeah, you're right. Before I start, let's see. Let me send you the link. I'm using FX Replay. I have an affiliate link if y'all want to use it. It would really, really help me out. Let me send you the link. Copy link. This is what I use to backtest. Check it out. All right. All right. All right. So before we get started, it's 9:30 right here in the backtest. I only trade in macro times. So what are macro times? Macro times is the last 15 minutes and first 15 minutes of a new hourly candle. So it's 9:45 to 10:15. All this is New York time. I trade in the first 3 macros after New York, all right? So it's 9:45, 10:15, it's 10:45. And if y'all have any questions, just air them out and I'll try to answer it. 9:45, 11:15. Then the last macro is 11:45 to 12:15. These are the macro times that I trade. This is super important. If it's not macro time, I don't take trades. If there's a unicorn out of the macro, I'm not going to take it. I'm only interested in taking trades in this 30-minute windows. 9:45, 10:15, 10:45, 11:15, 11:45, 12:15. The reason being is that in the macro times, as ICT says, in the macro times, liquidity gets seeked, liquidity gets taken. So it's more likely that at 9:45 to 10:15, if there's a strong draw on liquidity, most likely it's going to be taken in the macro. What we had yesterday on Wednesday, we had a lot of I saw a lot of people get cooked out of the macro. Look, let me just show you that real quick. I mean, we're gonna see it here real quick, but right here, look at this. People took this inverse right here. I saw a lot of people take this inverse for value gap right there. What time is it? Wait. Oh wait, that's in the macro. My bad. Where did people get cooked? I think people got cooked here anyway. I mean, there was no entry for me, but people got cooked here. It was in the macro. My bad. Nah. This doesn't help. Never mind. But I've seen a lot of people get cooked like pre-macro or in between the macros. They get like faked out, and then the real move happens in the macro. So this is super important macro times. All right. So right now it's 9:25 New York. Let's go ahead and start with the back test. I just wanted to let you know that this is what I'm trading only in macro times. Let's go forward in time. New York Open. So we're gonna do a daily bias at 9:40 is where we start doing our daily bias. So 9:35. There it is, 9:40. So we start to do a daily bias to establish your daily bias. What you're gonna do? Let me go ahead, move this to the side. You start on the daily chart. Then I have here a template already established bias. So you're gonna check all these time frames: the daily, the 4 hour, the 1 hour, the 15 minute, and the 5 minute. So on the daily, right here on the daily, so you establish a daily bias based on imbalances. What's an imbalance? Fair value gaps. Those are the imbalances you want to see. So for example, here we would have been, if this is the daily candle, we would have been bearish for bias because we tapped into a fair value gap. Also this, but right here we're neutral on the daily. So we just type it out, neutral. Then 4 hour. On the 4 hour, we're bearish because we're trading inside of a bearish imbalance. We're always going to be bearish until this gets disrespected, or bullish until a bullish PD array gets disrespected. So in this case, on the 4 hour, we're bearish. On the 1 hour, we're bearish until proven otherwise. Correct, brother. On the 15 minute, we're bearish as well. So we have a bearish bias going into the day for Monday. Let me just give me a second. I want to check something real quick. Another thing I'm gonna say about the bias is it's alright to have an idea and a sense of where price wants to go, but I wouldn't marry the bias. Like I wouldn't like, oh yeah, I'm not gonna take longs today. I wouldn't marry the bias. All right, like you need to be reactive to what price is doing, but it's a good practice to give you an idea and a sense of where price is most likely to go. But don't marry the bias. Don't, like, your bias can always change during the macro or whatnot. Just see something. We did take it short. All right. Yeah. Perfect. Okay, so this is Monday of this week, and we took the trade. Can you also share your journey in Excel? Yeah, for sure. I'll share it at the end of the sesh. I'll share it. This trade we took it on ES. I'm always trading NQ, but this trade specifically, I took it looking at ES. So let me go ahead and open ES. So y'all can see the beautiful, beautiful unicorn that printed on ES. So right here with a bearish bias, I dropped down to the 1 minute. It's 9:40 New York. See? And I'm watching price. So obviously, you need to mark out your draws on liquidity. There's a draw on liquidity right there. Draw on liquidity right there. I'm watching price. I'm watching price. There's nothing for me. It's 9:41. We're watching. So we could see here what I always like to do during like the unicorn, or if I'm looking for a unicorn, I always mark out all the order blocks I see. So right here, I could see a clear bearish order block. What's an order block? A bearish order block in this example is a bullish candle that's engulfed by a bearish candle. So right here, there's a bearish order block because this bearish candle closes with the body, closes below the body of this bullish candle. So this is a bearish order block. So I'll just mark it out just for precaution. Price is dipping. We have a bullish order block right here now. I always mark out every order block I see. We missed the trade. We missed the trade. My bad. It was right here. Yeah. I'm looking at right here. Price gets tapped right there. Okay, so alright, yeah, this is the trade we took. Let's see. So right here, this is on ES, by the way. I took it at NQ, that's why it's kind of iffy. But here on ES, you can see there's a bullish order block if we're bearish, all right? This is a bullish order block that gets displaced. Let's see. Damn, this is my first time doing any sort of explanation, my bad. So this is a bullish order block because this bullish candle engulfs the bearish candle. So it's a bullish order block. It gets displaced. That makes it a mitigation block. So let's add it here. Mitigation. So this right here is not an order block anymore. It's a mitigation block. And when you pair it with a breakaway gap right here, it displaces and leaves a gap clear as day. Right there. Leaves a gap right there. Look at how these two confluences stack. The mitigation block stacks with the breakaway gap. So price comes on this order block. It wants to displace higher. And then we get a shift lower. Getting a shift in market structure. There's still this draw on liquidity right here. That's my target. That doesn't get taken. Price comes. It's this week's trade. Price comes and taps on both the mitigation and liquidity. So where do you want to enter the trade? You always want to put a limit. So right here, we should have already been in the trade. But you put a limit order just above. Just above. Let's put the limit order. Let's see. Right there, look. All right, so this is the trade we want to take. Just about right there. You want to put your stop loss just above this bearish PD array right here. Anything that will push the price lower, you want to put your stop loss above that. So we place our order. We have our limit set. And let's see how it plays out. It taps. TP taken. To the draw on liquidity. That's that unicorn. And you always want to aim for the 2-to-1. This is the trade I took on Monday. Textbook delivery, beautiful delivery. This is what you want to see. You don't want to see price ranging and ranging. That's why you adjust your stop loss. If it's an efficient unicorn, it's going to deliver to the draw on liquidity. That was this is the trade I took on Monday. All right. All right. Let's jump to Tuesday. No break even. It wasn't even necessary to move to break even there because price just delivered efficiently. But you do want to micromanage your trade. Um, the only trade I micromanaged, I think, was yesterday's trade on Wednesday because I took it on the 5 minute, so it was more candles, it was more time, so I had to micromanage more in depth the trade. But Mondays and Tuesdays trade, which this is Tuesday, it's super efficient delivery. Like I didn't even have to do anything. I mean, I did move to break even, but all right. So same deal. We wait for the macro time to start doing the daily bias. On the daily, we're neutral. We do the top-down analysis. All right, let's do it. Fuck it. Daily, we're neutral. On the 4 hour, we're trading inside this 4 hour bearish and bullish PD array. We have this bearish PD array as well. I'm more inclined bullish because we're inside of the bullish one. I mean, we traded off both. You can mark it as neutral, but I'm gonna mark it as bullish because I expect some sort of reaction inside of this 4 hour. On the 1 hour, we tap this 1 hour. We're going for the next imbalance, which is here. So on the 1 hour, we're bearish. On the 15 minute, trading inside of a bullish order block, inside of this bullish PD array, a bullish on the 15 minute. And on the 5 minute, I'm pretty sure we're gonna be bullish on the 5 minute because we're gonna sweep this liquidity. We're trading inside of this, have this gotten inversed. All right, let's just move on. So it's 9:45. Come the macro. We're taking liquidity. This is MES. I took this in NQ. Oh boy, yeah. You can already see there's big time SMTs at the lows. That gives me a bullish bias. So right here, let me just zoom in. Right here with a more neutral bias, like I'm just observing the chart. Like I don't really want to take a short here because it's just displacing. I'm honestly just waiting for a unicorn to show up. We have this low was taken on NQ but not on ES, so we have SMT, a big time SMT right there. So let's just watch what price does. So right here we already have an order block right here. We mark it out. Always mark out your order blocks, just mark them out. We're watching price, we're not doing anything. It's macro time. We have an order block right here. We mark them out. Like if any case price wants to like inverse, leaving a gap might be something we're interested in taking the continuation lower, but we're watching. All right, so right now my signals are on because it's like, all right, are we gonna? What does bearish and bullish order block entail? So a bearish and bullish order block, what basically tells us is that smart money is coming in and trying to inverse the price. So right here we have a bullish order block, which is a bearish candle engulfed by a bullish. You could see how smart money right here takes the last orders for buys and they inverse the price. So people get like trapped here. Like people who shorted here, oh yeah, I'm gonna take the continuation. Retail traders like us got cooked. Same thing here. If you're thinking, oh okay, price is gonna flip, you got cooked. Usually what happens is price respects these order blocks. If you ever heard like supply and demand strategies, it's basically order blocks. But usually what happens is price could come, respect the 50%, or even like come this place, leave a wick, and respect the bullish order block and continue pushing higher. So order blocks are hella important. I would suggest y'all keep an eye on them. But this is the exact trade we took on Tuesday, all right? So right here, I'm looking at this bearish order block. I want to see it get inverse. So this will mark a market structure shift. About right there. All right, let's go on. We need one more candle. All right. That right there is already my market structure shift. It's inversed this bearish order block comes and sweeps liquidity on the left. So this is a breaker block. Instead of a mitigation, it's a breaker block. The difference between a mitigation block and a breaker block if it swept liquidity. So a breaker block sweeps liquidity. A mitigation block does not sweep liquidity. So in this example, since over here we swept liquidity on the left, this is the last bearish order block. When we inverse it, it becomes a breaker block. There's no difference really on like which one is more effective than the other, but it's just good to know. I'm still forward testing the strat to see which one works better, but so far both work. When you stack a breaker block or a mitigation block with a breakaway gap right here, that's that unicorn. Let's mark out. Look at this beautiful breakaway gap. Another confluence that I want y'all to keep in mind here. Let me see. This is that bag. So when you stack, look at how they're stacked. When you stack the breaker block with a breakaway gap right here, that's that unicorn. Another thing I want y'all to notice is how this bullish candle does not have a bottom wick. So that to me tells me that price wants to come and rebalance this inefficiency to continue to push higher. So this is the exact trade I took. So I mostly base my take profit based on my stop loss, not the other way around. So I'm always trying to shoot for at least for a 2-to-1. So in this case, I know my stop loss is going to be here just about 30 points. Why the bag? It's not the first FVG on the inverse. So you don't want to see price come and test these breakaway gaps. Like you want to see it test the one stacked with the breaker block, not this one. Like price shouldn't come and tap this one. For it to be an official order block, should the candle be at the same level besides each other, or can either candle be above or below? All right, wait, let me answer this question first. For it to be an official order block, should the candle be at the same level besides each other, or can it be either candle above? So you always want to have them like this. For example, this is a clear order block. You see how this is a bearish candle right next to a bullish candle, but look at how the body closes above. It closes above the bearish candle. This makes it a bullish. In same case here. We have a bullish candle, and look at how the body displaces. Look at the difference in size. Look at how it displaces. So you always want to see them side by side like this. If that's what you mean, you'll always want to see them side by side. You always want to mark out your order blocks. And then Rodrigo says the unicorn always needs to shift or breaker block with a fair value gap. Yes, that's the unicorn. You always want to see a market structure shift paired with the breaker block, paired with the breakaway gap, with the FVG. You want to see all these three together because sometimes you're going to see like a breaker block with a bag, but it doesn't shift market structure. It's going to be a weak unicorn. It's a B plus setup, not an efficient unicorn, because most likely what's going to happen, since we failed, it's probably just going to respect the bearish order block. Because what could happen if we don't get a market structure shift is this bearish order block gets respected the order, we come up here. Let me back up. So for example, this candle, it doesn't shift in market structure, right? What could happen is we could have like a down close candle right here. Like it could just respect this bearish order block, because the idea behind order blocks is that smart money, for example, if price is gonna sell off on this huge, look right here, we have an order block right here actually. Let's think of smart money. Let's think of the big institutions, okay? So if price for the day, the day's just starting. Price for the day, we want to see a big sell-off. Where do you think smart money rather sell? Like down here? Or do you think it wants to sell up here where the order block is? Of course, it wants to make liquidity first. Fake out everyone that, oh yeah, market's gonna flip, buyers tap into this order block, this zone where sellers were already present, comes up, takes that order block, and then just like keeps dumping lower. So smart money always wants to short on a premium, and smart money always wants to buy on a discount. Those are concepts y'all should know by now or need to know. So what is a discount and what is a premium? Let me see. I mean, I don't know what level of ICT y'all got, but if you get out your fib tool and mark out the range, let me just mark it out. This is also super important. Yeah, of course. All right. I mean, I'm pretty sure like there's got to be someone that doesn't know this, but so we mark out the range from the high and the low. The bottom 50% right here, this is discount, and up here is a premium. So you usually you never want to buy on a premium, and you never want to short on a discount. So if I was looking for a short, let's say down here on a discount below the 50%, like for a continuation, we're most likely gonna get cooked. You don't want to take this, like below the 50%, you don't want to keep shorting, You want price to come up to like the fib retracement to the golden to the OTE. Let's mark out the OTE, which is between these two spots right there. That's OTE. So usually if you want to look for a short, you want to look for a short here. And I think this does play out beautifully, by the way. But you want to look for a short like here on a discount. I mean on the premium. Same thing goes for longs. If we flip I just want to make sure we get this out of the way and explain it. Same thing. If you want to look for longs, if you think price is gonna reverse, you want to look for longs on a discount below the 50%. Usually an OTE is where you want to look for longs. So if price comes, for example, and retraces into this bullish, it's a good probability, but that depends on your strategy. All right, it's something to keep in mind as well. I mean, already with my naked eye, I could see if it's in the discount or in a premium, but use the fib tool to add those confluences. In this case, I mean, if we mark out the whole range, like from here, from the you always want to mark out the high from the manipulation to the low. Right there. Let's reverse this. We go back to the 1 minute. You can see I'm longing. I'm taking a long in a discount. So that's something you always want to keep in mind. If you're looking to long in the premium, rethink your strategy. Will this work, or am I just like chasing a move that already happened? You never want to chase the moves, all right? I usually schedule it 15 minutes or 1 hour. Yeah, that's perfect, Rodrigo. That's perfect. Confluence, 1 hour, 15 minutes. That's a good higher time frame in depth to see in the lower time frame if you're trading inside of a discount or a premium. All right, let's keep moving. So back to this trade. Just that we get that out of the way. Back to this trade. So we have the unicorn stacked. We have our breaker block paired with the bag. And then we have our market structure shift. And I can see here on the left on ES, we also have a minor market structure shift, but we have both confluences stacked as well. So it's not necessary, but whenever you see it on both assets, it's a higher probability. So you want to stack these higher probabilities. The market is fucking random, bro. Anything could happen. Anything could happen. But the more keen you are into tricking your brain into thinking that you have an edge, the most likely the trade is a good trade. The trade is gonna play out. So this is always going to be a gamble, bro. There's no way the unicorn works 10 out of 10 times. It happened to work this week, but there's no way it works all the time. Or there's something that's bound to fuck up your trade because it's probabilities, bro. It's inevitable. It's bound to fuck up, you know? But the more you could know that it's a probability game, the more you accept your risk, the better you're gonna be off. All right, all right. So in this case, what I did was I didn't want to see price come and retrace into this breakaway gap stack with the IFVG. Like I want to see it respect this breaker block. So my stop loss, accepting the risk, is going to be right here. Is going to be 30 points, and I'm targeting for a measly 60 points. For an exact 2-to-1 was my trade. Aiming for these equal highs right here. I could have targeted maybe this order block, which I think it does end up playing out. But I just want to take a quick scalp, quick 2-to-1. I don't want to take the whole move. I just want to take the continuation in and out. All right, so let's place the trade. See what happens. Want to risk 500? There it is. I set my limit. Let's watch it play out. We get tapped. When we take these highs, when price took these highs, I adjusted my stop loss to below this wick. Or you could adjust it to break even. Usually this was like a short range. It was like small, quick scalp. But usually when price moves above 50%, which in this case it did, you want to move to break even. But in this case, we just got a clean tap. Look at price come. Tap, we get a beautiful rejection from this bag. And price delivers beautifully. And we had a perfect exit because price ended up inversing. But this is the trade we took on Tuesday. And we were done for the day. If I take a win, I'm done. If I take a win, I'm done. But if I take a break even or a loss, I'm a wait for the next macro to look for a trade. So I'm only allowed 2 trades for the day. But if I take a win, I'm done. I'm done for the day. There's no need to look for more trades. So if y'all seen my reel about risk management, that's what I follow for my risk management strat exactly. I'm risking, if you could see my calendar here, I'm risking 300 to make 600. In this case, in Tuesday, we're gonna go over Tuesday right now, but we closed early. You're gonna see why. But I'm always risking 300 to make 600. That's my golden zone. So my stop loss is going to depend, or the contract size is going to depend on the stop loss. So right here, since it was 30 points, I'm pretty sure that 30 points is 5 micros, is 300 USD. So keep that in mind. So this was Tuesday, all right? Now we're gonna move to Wednesday. So yesterday, what? Let's see if it's gonna let me, because I do want to go over yesterday. 6. Stay here. Fog. It's not gonna like. Yeah, it's not gonna let me. What the hell? Really wanted to go over edit date, end date. Save. There you go. Should let me. All right. So do y'all have any questions so far? I know you already asked some, but any other questions y'all have? So yesterday it was kind of iffy because Top Step went down. But we did have a possible entry that I had a limit order placed. So right here, let's see, it's 9:20, 9:30. Are you gonna backtest other days? So for now, I'm gonna leave it here. Like I'm gonna do Wednesday. We're gonna answer some questions, and I'm gonna leave it here. But next week we're gonna keep backtesting. Yeah, I'm just doing this week, just to review this week range so y'all could see, because I feel like it's the perfect example because I took these trades. You all watch me take these trades, and it's just the thought process I have. But next week, I'll do like a full-on 1 hour backtest. Right here, since it's holidays, I don't want to take uh too much time. Bootcamp videos, holy shit, I don't know, brother. I do want to do long form YouTube, but we'll see. All right, so let's see. What is it? It's 9:30 right now. We have market open. So, like I said, on the daily, like just eyeing it out. I'm not gonna do this whole bullshit, but you do want to do that daily, 4 hour, 1 hour, 15 minute, 5 minute. In this case, we're close to trading inside of this. There was SMT here. I remember ES took this high. ES was trading inside of a bearish PD array. So for me was signaling bearish, like bearish bias. We're trading inside of this 4 hour. Congratulations. Thanks, brother. Road to fucking 1K. We're just getting started. Just getting started. We're trading inside of this bearish order block right here. So like I said, this to me is the signal that, all right, so we're in a downtrend, you know? Smart money does not want to sell down here, bro. It does not want to sell down here. It wants to sell up here on the bearish PD arrays. Whenever prime is on a premium, that's where smart money wants to sell. So that to me, just in the naked eye, is signaling bearish order flow. I want to take shorts, you know? That's the 4 hour. Same with the 1 hour. Neutral bias, but more inclined bear. We do have some order blocks here. It's 9:34. Let's move forward. $9.45. There you go. So we do have an order block here. We do have the equal lows here, which this was exactly what I was looking at. This is in the first macro. We didn't take a trade in the first macro, but I'm gonna show you my thought process as well because I did have some limit orders placed. So I'm watching. There's nothing for me. Just watching price go. All right. So this is the first order block that I see. This is a breaker block because it sweeps this liquidity right here. This bullish order block comes, takes liquidity, and then it gets inversed. So this is a breaker block, and it gets inversed with what? A bag. So that's the unicorn right here. Bag. So the idea is you want to mark out the wick, the whole candle. I just do the body. It's the same thing though. Same concept. Let's go ahead and put it green so it's better. So that right there, if I'm already bearish, we already swept liquidity. We have some equal lows down here. I'm bearish, like I want to take a short, you know? So right here, what I did was I put my limit order right here. You want to put it above the high. You want to target a 2-to-1, bro. Just about. Let's place the order. Let's see what ended up happening. Price ends up not tapping. The move already happened. We did not get tapped. We got edged right there. All right, so it's like, all right, I'm out of there. I'm not gonna take this trade. That was that first one. We didn't get tapped. You close the trade and wait for another confirmation. So right here, same ordeal, bro. We have an order block, if you count this could be the real breaker because this is the one that took the price higher. So to me, this is like a higher confluence. Same thing. This is our breaker block. You mark it out. Let me wait. Is it a bag? It's not a bag. So what I did, since we did get a market structure shift here, and we did trade inside of this breaker block, I counted this as my bag right here. So same ordeal. If my bias is, or if my draw on liquidity are these equal lows and we're still on a premium, why didn't you just enter? Because I need to wait for the tap. The tap is essential. I need price to tap the bag. I'm not gonna enter on no tap. I need to, like, the unicorn has to happen. If the unicorn doesn't happen, I don't enter the trade. Same thing here. Same thing happened here. I was like, all right, breaker block with a bag, because if we count the whole wick, you can see it's inside. And we did have a market structure shift down here. Market structure shift. So that's a unicorn as well, you know? So what we do, I place my limit right there. I placed it above this order block, this bearish order block, because price can come, tap the order block, and then continue displacing. So you want to put it above any bearish PD array. So in this case, above this bearish order block, and I'm targeting a 2-to-1. Just about. There's equal lows here, equal lows here. I'm bearish, you know? Like, I want to see this. I want to see it get tapped. Let's see what happened. Same thing. I put my limits. We did not get fucking tapped. We got edged. We did not get tapped. And that's just that. You close the trade and you watch it go without you. That's exactly what happened to me. Just watch it go without me, bro. So then right here, nothing happened. We waited for the next macro, also because of that top step bullshit. But it's part of the game, you know, like watching trades go without you. You need to be patient. You need to wait for that unicorn to happen. You need to be mechanical. You need to be emotionless, you know, like you need to surrender to the idea that other entries will happen in other macros. It's like, all right, I'm not gonna, you don't marry the trade, you know, like just fucking let it go, bro. All right. So we move on. 9:45. Here, I was still kind of inclined bearish because we didn't sweep this liquidity. However, I'm always not just looking at the 1 minute. I'm looking at the 3 minute. Let me start. I'm looking at the 2 minute, 1 minute, 2 minute, 3 minute, and 5 minute. I'm looking at all those lower time frame to see if I spot a unicorn in any of the time frames. So right here, what I was watching, my thought process, because here we took a long, but what I was watching, I was still like kind of inclined bearish. I was looking into this order block, this bullish order block, but as you could see, if y'all noticed, wait, we had a gap here. We had a gap here in top step. I'm 100% sure. We had a gap here. So what had happened was we had inversed this gap, and we're respecting this bullish order block. Oh, it's on the 5 minute. My bad. On the 5 minute. I was looking at the 5 minute. But I was looking at the 3 minute and 1 minute. There was these order blocks that I was looking into. Like I was interested in seeing if they were gonna get inversed. Like I was interested in looking. I marked out the order block and I was interested in seeing if it got inversed. But look at this strong reaction of that order block, bro. Like to me, this signals that bullish order flow wants to continue after this minor sweep of internal liquidity. Like to me, it signals that price wants to take this high. Since we're rejecting this bullish order block, we've already had a market structure shift. We've displaced higher. We had an inverse bullish fair value gap here. We're tapping into a bullish fair value gap stacked with a inverse fair value gap. Like look at the bullish fair value gap with the bearish, and then we have our mitigation block right here stacked with the bag mitigation block. So this is a mitigation block because it did not take this liquidity. If it had taken this liquidity, it would have been a breaker block. But since it didn't take it, it's a mitigation block paired with a market structure shift, paired with the bag, paired with the inverse, paired with, like it's just bullish. To me, the signal was bullish, but right here, let's watch it play out. I entered there off that reaction. It was a market order. I entered 5 contracts. My stop loss, or maybe it was 4 contracts, was just below this low, and my take profit was just about here. I mean, the entry was closer to here. It was more like this, getting that perfect 2-to-1. Yeah, yep, just about. Yeah, I was aiming for like a 3-to-1 here, since I was like super confident that we were gonna take that buy side. We just watch it play out. I mean, ignore these entries. I took it on the market. 5 minute, I think the trade was on the 5 minute. Yeah, on 50K. I'll show you the entry right now. I mean, you can see the reel as well, but just watching it, I'm waiting for this high to get taken so I could adjust my stop loss. High gets taken, adjust my stop loss. And I exited early because ES had previously taken the high. And NQ was not close of taking it, so to me that signaled an SMT, and I ended up exiting the position early. Let's go ahead and look at it in Top Step. So yeah, I can see the exact trade I took. It's that same one right here. Let's mark out this high. We entered on 25 219.75, so it's 25 219 point right there. We entered right there. My stop loss was down here. My take profit was up here. Perfect 2-to-1 right there. So same thing. We had our mitigation right there. We had our bag right here. We entered off the trade and we closed in 25,263.75. So just about there. So we got like a 1 to 1.5 almost. But we closed early. I mean, trade ended up playing out perfectly, but we had already won big on the week. I didn't want to get like reversed. SMT had already happened. What I could have done, since it was like just bullish Peter Ray, I could have gone to the 1 minute and I could have trailed my stop loss below the gaps. Because I had trailed at first, I trailed below here. I could have just kept trailing in every gap, like below here and then here and then probably here, and I would have gotten stopped out like with a higher higher RR. But bro, I'm just happy, like efficient trade, clean delivery. It gives me confidence in my model that it works. Just all out clean, efficient, and yeah, I mean that's that. That's that unicorn. Do you all have any questions? I'm gonna leave it here. But do y'all have any questions? Anything y'all want to tell me, ask me, anything. Most of the setups he made plus, yep. It was a good week, honestly. It was a good week. And my eye has gotten real sharp, I'm not gonna lie. Like back testing this, forward testing this, taking notes, watching videos, reading books. This like it I've gotten very, very sharp in finding the unicorn. It makes me very mechanical. So y'all wanted the journal? Yeah, just don't forget to share the Excel doc. I got you. I got you. So the one I use currently is different. It's not really that different. I mean, y'all could tweak it to whatever you want. Let me see. Give me a second. Let me just share it, bro. Let me just share it. Let me just put the price in the bag. Stop yapping and just share it. It's this one. Let's see. There you go. Y'all can have it just for tuning in. There it is, bro. So to get it, like y'all click on file and you put make copy. Cause people want access. I'm not gonna give them access because this is my personal shit. But you could just make a copy and you have it in your own sheets or like download it or do whatever the fuck you want with it. But the only difference here is I don't have these anymore. Like these entry models, I removed this. I removed this, just this. Like I removed this whole shit, but y'all could keep it if your strategy varies. But the formula still work and everything works. But this is my current journal that I'm using. Like I said, I removed that, but it's the same thing basically. So you all need to make sure in your combines or in your evaluations, make sure you're trading your strategy, but just put more risk. Don't gamble, bro. Just trade the same shit, but just put more risk. For example, I'm risking 300 on the funded. On the evals, I'm gonna risk 500. But I'm not trading no bullshit. I'm trading the unicorn, you know? I'm trading the same unicorn to keep practicing, to keep forward testing, to keep patience. Patience. So that's that, bro. Let me just I already shared the let me share it again. I'm gonna share some affiliate links. I mean, I don't want to be that guy, but shit, bro, like if in any way any of the information I provided on this live stream was valuable, I'd appreciate. Who did you learn it from? All right, so let me drop some more sauce for my people sticking around. Let's go on YouTube. Speak of the devil. This is my unicorn guy, ICT fanatic. He's the goat. Milo. Check him out. Subscribe to him. Let me send the link. This is who I learned the unicorn. But another source for learning for me, psychology. Uh, Justin Werlin. Forever model, price action. This is my guy. I learned a lot of shit from him. Justin Werlin. Obviously ICT himself. I did watch ICT mentorship. I did watch a lot of ICT. ICT, let me link it so y'all get your resources. And y'all need to understand that like to get to this level where I'm at, this shit took me a year, bro. A year, cause or more than a year, like a year and 6 months, because I started learning ICT of July of last year, bro. And just now I feel super confident in that I know how to read price action, you know? I mean, I'm not the best, but I could I know I could be a successful trader right now at this point. So far I've gotten about 8 payouts. Uh, I'm a bit of in a dry spell. I've been in a dry spell since August. August was my last payout. Ever since August, I haven't gotten a payout. Um, but I don't know. Like I'm close to one, and I'm ready to get my ninth payout of the year. And we're fucking cooking, bro. We're cooking. Like the journey, recording my screen and everything is part of that road to success. So y'all could see transparent journey. So this is another affiliate that I have from Alpha Futures. If any of the information I provided in this live stream was valuable, I'd appreciate if y'all comment on my reels or if y'all upload a story or if y'all use my affiliates, if y'all subscribe to the YouTube, like all that shit supports me hella. It hella supports me and I'd appreciate that. So thank y'all for tuning in. If y'all don't have any other questions, I'm about to pop off. Enjoy my day. It's Thanksgiving. Enjoy the day with your family. And nothing. Anything? Any last words? Nobody? Any last words? Thank you again and have a good one. All right, Avi. Thank you, brother. All right, so boys, thank y'all for tuning in. I appreciate you. We're gonna do this more frequently. Stay tuned next week. Be active on the Discord. I'll catch you all, bro. I love you. I fucking love y'all. Ding, 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 ding. Take care. Take care.